Good morning, everyone. Welcome once again to the continuing session on process costing. Today is our last session for the topic process costing. In the last session, we had discussed about equivalent production, and we have learned about equivalent production, and we know that we prepare four statements. One is the statement of equivalent units. The second is the preparation of statement of cost for each element of cost. So the cost per unit for material, labor, overheads, etc. The third statement was statement of allocating or assigning that cost to various accounts like finished stock account, work in progress account, abnormal loss or abnormal gain account. And finally, we were able to prepare the process account using all this information. Assigning or allocating this cost to finished goods account, closing work in progress, and abnormal gain or abnormal loss. And finally, we were able to prepare the process account. So these can be done using FIFO, LIFO, and weighted average, but we will follow FIFO or weighted average. In the last session, we had discussed the question and we solved it using FIFO method. In the weighted average method, there are a few differences. So we will take up the same question today and continue using that and solving it through weighted average method. So this data is pertaining to process one. You have 1500 units, which is costing us 15,000. So the first change or the first important information is that this question cannot be done using weighted average method. This can be done only using FIFO. Why we can't do it using weighted average method is because we know that 1500 units are costing us exactly rupees 15,000. But we also need to know that this 15,000 is comprised of what part of material cost, what part of labor cost, and what part of overheads cost. So I am taking for example, out of this 15,000, let's say 8,000 was for material and 3,000 was for labor and 4,000 was for overheads. So this will help us do the question using the weighted average method. So remember that if you are supposed to do the question using weighted average method, the first important thing is that the opening WIP should also be bifurcated into each element of cost. How much is the cost of material? How much is the cost of labor and overheads comprised in this 15,000 rupees? So let's assume it is 8 plus 3, 11 and 4, 15,000. So material, labor and overheads, 8,000, 3,000 and 4,000. And then we start continuing with the question in the similar fashion like we had done for the FIFO. But let's look at what are the inputs of units. There are two inputs of units. One is 1500 and the other is 18,500. So input is 1500 and 18,500. So we are preparing the statement of equivalent units using weighted average method. Is it okay if we follow the systematic approach? Systematic approach of what, Anil? All right. So we have opening WIP 1500 units and introduced in the process 18,500 units. Now, what is the details of the output units? You have closing WIP 5,000 and which was 90% complete as far as material is concerned, and labor and overheads wise, it is 30% complete. Units transferred to the next process 15,000, and there is a normal loss in the process which is 10% of the total input. So 10% of 2,000, 20,000 is 10,000. So this totals to 22,000, which means we have a abnormal gain of 2,000 units. So normal loss is 2,000. Normal loss we have said is always assumed to be, I will combine the material, labor and overheads here as the percentage completion is same for both labor and overheads. And it will be 0% complete as far as labor and overheads is concerned. I'll not calculate separately opening WIP and introduced and completed. Instead, I'll just say units transferred to next process or finished goods units. So what I assume in weighted average is whatever is done on these 15,000 units, that is done in this period only. So it is 100% complete, and whatever the cost was incurred is incurred in this period only. So this statement I'm using is a systematic way of calculating the statement of equivalent units. Closing WIP is 5,000 units. It is 90% complete as far as material is concerned and 30% complete as far as labor and overheads is concerned. And now if you look at the total of output, you will see that it is 22,000. So there is a abnormal gain, 2,000, and therefore the total of units is 20,000. Abnormal gain is always assumed to be 100% complete. So now if I calculate the units, this is 0. Units transferred 100%. Closing WIP 90%. And labor and overheads, it is 30%. So 1,500. 5,000 into 30%, 1,500. 5,000 into 90%, 4,500. And these 2,000, which are in negative, 100%. So the cost incurred on materials is equivalent units of material is 15 plus 4, 19,500 minus 2,000. So it is 17,500. And for labor and overheads, 16,500 minus 2,000. So it is 14,500. So far, I hope all this is clear. Right. Now, when we prepare the statement of cost for each element of cost. So the first is you will have the element of cost, which is material. Now, the second important thing in weighted average is what is the cost of material? It was 52,000. But to that, I have added plus 8,000. So the cost of opening stock will not only move to the process cost, but will also move to the statement of each element of cost, adding 8,000 to material, 3,000 to labor, and 4,000 to overheads. So the entire cost, 52 plus 14 plus 28, which you incurred in this period, together with the 15,000 which you incurred in the previous period, has been brought to this period only. So you have added the entire 15,000 in the current costs only. Therefore, the units are also added as it is completed in this period only. So 8, 3, and 4 will be added to material cost, labor cost, and overheads cost. So 52,000 plus 8,000 is 60. But you remember we have to subtract the scrap realized from sale of normal loss. So it was sold at 2 rupee per unit, and we have 2,000 units of normal loss. Normal loss is 2,000 and the scrap value is 2 rupee per unit. So this 2,000 into 2, 4,000 will be subtracted. So material cost comes out to be 52 plus 8, 60 minus 4, which is 56,000. And what is the equivalent units of material? We will pick up from this statement. It is 17,500. So what is the cost of material per unit? 56,000 divided by 17,500. So before, when we were doing FIFO, we had exact answers. They were clearly like 3 rupee, 1 rupee, 2 rupee. But here you will have fractions because we have added some part of the opening stock material cost in this. So it comes out to be 3.2 rupee per unit. Earlier it was 3, now it is 3.20 per unit. Similarly, we will take labor cost, which is 14,000. But to that, we have added another 3,000 of cost from the opening stock. So total becomes 17,000. And the equivalent units of labor is 14,500. So the labor cost per unit becomes 17,000 divided by 14,500, which is a fraction of 1.1724. Now I'll round it off to some number which might create a difference in total, so you can adjust it. 52,000 came. Okay. 52,000 is given in the question. Material cost 52,000 plus 8,000, the cost of material in opening WIP, which I have assumed here. So 52,000 plus 8,000 is 60,000 minus scrap realizes 2 rupee per unit. So our fundamental rule was total cost minus scrap realized from normal loss divided by total units. But in equivalent production, we will take it for each element of cost separately. So material cost 52 plus 8,000 of opening WIP because we are following weighted average. So 52,000 plus 8,000, 60,000 minus the scrap realized from sale of normal loss, 2,000 units of normal loss, and this 2,000 is multiplied by 2 rupee per unit. So amount realized from sale of normal loss should be 2,000 into 2, 4,000. Therefore, the total material cost comes out to be 52 plus 8, 60, 60,000 minus 4,000 is 56,000. 14 plus 3, 17,000. 28 plus 4, 32,000. So in scrap, sale of scrap, we assume it to be completely reducing the cost of material. So 52,000 plus 8,000 minus 4,000 is 56,000. Divide by from, so you will pick up the cost from the question and the equivalent units from the statement which you have prepared. So material equivalent unit is 17,500. So the total cost of 56,000 is incurred on 17,500 unit, which comes out to be 3.20 per unit. Similarly, the labor cost of 14,000, which was currently applied, plus the labor cost on opening WIP. No scrap value realized will be deducted, reducing the labor cost. So 14 plus 3, 17,000 is the labor cost, which will divide the number of equivalent units of labor, which is 14,500. So 17,000 divided by 14,500 is 1.1724 something. If I round off, it can become 1.17 only. I can ignore the 24 part. But let me keep it till 4 decimals, otherwise it will not match the total costs. Then you had the overheads cost, which was 28,000, plus another 4,000 was the overheads cost in the opening WIP, which I have assumed. Right? Overheads cost, bifurcation of this 15,000. So the total overhead cost was 28 plus 4,000 is 32,000. So see, we have assumed in the breakup would be given, definitely. If the breakup is not given, the question cannot be done using weighted average. And so if this information is given and the breakup of opening WIP is not given into how much is the material cost, labor cost, and overheads cost, you may assume that the question is impliedly done using FIFO method. 28 plus 4,000 is 32,000. And the equivalent units of overheads is also exactly same as labor because the opening WIP and the closing WIP was exactly having the same percentage in material and labor. There can also be given the cost percentage completion of scrap, which is not given in this question. So that should also be same if you want to combine the labor and overheads together in your statement of equivalent units. So 32,000 divided by 14,500 gives 2.2069 I can take. Now, this was reduced to the lower fraction and this has been rounded off to the higher fraction. So most probably your totals will match after you have done this. Okay. So is the statement of cost for each element of cost clear? How we calculate the each element of cost? Material cost plus the material cost in opening WIP minus scrap, labor cost plus the labor cost of opening WIP, overheads cost plus the overheads cost involved in the opening WIP. When these totals are taken, from this you subtract only the scrap value realized from the sale of normal loss units, 2,000 into 2 from the material only. Statement of equivalent units you have learned. So see, we transferred the units 15,000 and we assume that the entire 15,000 has been 100% completed in this period. So when we have brought the cost also from the previous period in current period and whatever the work we have done, that also we have calculated in the current period. So simply pick up the statement of equivalent units from this table, 17,500 and 14,500. So this statement becomes simple. Pick up the figures from the question, subtract the scrap realized from normal loss from the material and divide it by the units which you have calculated in the first statement. So you will get the cost per unit for each element of cost. Then we assign this cost to the various parts of the process cost. So normal loss, we will not assign anything, 0. Then why? Because the cost of normal loss units is to be borne by the good units. Then you had abnormal gain of 2000 units, which was 100% complete as far as labor and overheads were concerned. Material, labor, overheads. So the equivalent units become 2000, 2000, and 2000. And the cost for uh, material was 3.20 per unit. Now you pick up this figure from the second statement. 1.1724 and 2.2069. So the total value of abnormal gain would be 2000 into 3.2, 6400, 2000 into 1.1724, which is 2344.8. I'll call it 2345, and 2000 into 2.2069. This is 4413.8. I'll round off to 4414. Then you have to calculate the value of closing WIP, which was 5000 units, which was complete as far as material, labor, and overheads, 90%, so 4500, and 30% as far as labor and overheads, so 1500 and 1500. 90%, 30%, 30%. So 4500 into 3.20, 1500 into 1.1724, and 1500 into 2.2069. 4500 into 3.2 will give you 14,400. 1500 into 1.1724 will give you 1758.60. I'll keep it at 0.5, round off to 1758 only, or I can give it 1759. I'll just see what I'll do about it. I'll keep this in mind. 1500 into 2.2069, 3310.35. I'll round off to lower side, 3310. Finished goods were 15,000. As they were 100% complete as far as material, labor, and overheads is concerned. And the cost of material, labor, overheads is, so it becomes 15,000 into 3.2, 15,000 into 1.1724, and 15,000 into 2.2069. So I can take 15,000 common and straight away add 3.2 plus 1.724 plus 2.2069 multiplied by, so the total cost comes out to be 7.1309. This multiplied by 15,000, the total will be 106,963.5. So I can, again, I'll just see what I'll do with this. I think 106,964 I can keep. Okay, but before that, what I'll do is 52,000 plus 28,000 of overheads plus 14,000 of labor is my total cost I have incurred this period, which comes out to be 94,000, right? 52,000 plus 28 plus 14. To this, I have added opening WIP, which was costing 15,000. So this becomes 1,09,000 in total. One lakh 9,000 minus I realized the scrap from normal loss. So it is 1,05,000, which I have to allocate amongst all this, where abnormal gain is in the negative. So the total cost of abnormal gain is 6,400 plus 2,345 plus 4,414. It is 13,159. The cost of closing WIP 14,400 plus 1758 plus 3,310. So this is 19,468 and this is 1,06,963. Now just see, these two are in positive and this one is in negative. So just calculate 19,468 plus 106,963.5, or you can ignore the 0.5 as of now, minus 13,159. Does it total to exactly this figure? If no, that means there you have to round off in such a manner that the total should come out exactly the same. Okay. So let's prepare the statement of process account. We will write here to opening WIP, that was 1,500 units and costing 15,000, to material 52,000, 18,500, to labor 14,000, and to overheads 28,000. And we know that there was abnormal gain, so we'll put the abnormal gain on the debit side here of 2,000 units. So the total of units will be 22,000. By normal loss, 2,000 units. By transfer to next process, 15,000 units. By closing WIP, 5,000. So once again, total cost is 15,000 plus 52,000 plus 14,000 plus 28,000, which is 1,09,000. And scrap realized from sale of normal loss would be 4,000. So you can see here the total cost of 1,09,000 minus 4,000, which is equivalent to 1,05,000, is to be allocated in these three figures. Okay. In finished goods, labor cost per unit is 1.17. I have put okay. I'll just check. So the labor cost is 1.1724. Okay. So finished goods cost will then become 3.2 plus 1.1724 plus 2.2069. 3.2 plus 1.1724 plus 2.2069, which is 6.5. Okay, 793 multiplied by 15,000 units. So this is 98,689.50. All right. This plus 19,468 is 1,18,157.5 and minus 13,159. This figure comes out to be 104,998.50. Okay. So see, it should be 1,05,000 and this comes out to be 1,04,998.50. Therefore, I will adjust it here itself so that the process accounts I don't have anything to erase. So instead of 98,689.50, I'll call it 98,690. So I've increased the 50 paisa here. This also I'll round it off to 1759. So 1 rupee I have increased here. And now my total will increase by 9. And then it will exactly fit 105,000. Okay. That's why I was saying that I will keep this as a question mark. I'll take the total. What was my total cost? Material cost, labor cost, overheads cost. In this period, I had incurred 94,000 plus the cost of opening WIP, 15,000. So my total cost was 1,09,000, which I have to recover. Since 4,000 is recovered from sale of normal loss scrap, therefore, the total cost to be allocated is 1,05,000. So 13,159 goes to abnormal gain and 98,690 goes to transferred goods and 19,469 is allocated to closing WIP. Now you will see that your totals will exactly match. So on the credit side, you have 4,000 plus 98,690 plus 19,469, which is 1,22,159. Debit side 15,000 plus 52,000 plus 14,000 plus 28,000 and plus 13,159. So this is how you will prepare the process account. In this question, when you will prepare the normal loss account, you will say to process account, normal loss 2,000 units, which should have fetched us 4,000 rupees. Abnormal loss account is not there. There is no abnormal loss here, but there is an abnormal gain. So by process, we have 2,000 units extra, which was of worth 13,159. So this will go to costing P&L account, but not the entire thing, because first we will sell the normal loss units. How much are the truly normal loss units by bank? Now you see 1,500 was opening WIP, 18,500 was introduced in the process. So the total units were 20,000. But out of 20,000, 5,000 is closing WIP and 15,000 units have moved to the next process. So we don't have any scrap at all. So whatever should have been the normal loss is exactly, it has become our abnormal gain. We don't have any units, which means this figure is not there. So abnormal gain account will have to bear the amount which should have been realized from normal loss. So what we are trying to say here is that if there would not have been any normal loss, abnormal gain, we would have still had, if this gain would not have been there, we would have been having scrap of 2,000 units in our hand, which we would have sold, and we would have still got 4,000 rupees from that. But now this is not sold as scrap, this is sold as good units. So our true profit is 9,159. So even in the equivalent production, you might have to prepare the process account, you might have to prepare the abnormal gain or abnormal loss account and the normal loss account. If you have any queries regarding this, please ask. Otherwise, this is how we are going to do this counts, right? So if I point out the difference in weighted average and FIFO, what is the first difference? Number one, the first difference will be in the question itself. The question will tell you that what is the detail of material, labor, and overheads. So that material cost is added to material, labor cost is added to labor, and overheads cost is added to overheads. Indirectly, what we are doing is we have brought the cost of the last period and added it to the current period only. And therefore, the units also we are assuming 100% complete in this period only. So that was the first change which you will see in the question. Second, here you will write weighted average. And third, you will not combine, segregate opening WIP complete and introduced and completed. Only finished goods units transferred to next process, 15,000, which is assumed to be 100% complete in this period only, right? Then the equivalent units will differ, which will come out automatically. You don't have to do anything. Finally, take the cost of material, add to it the cost of opening WIP material, subtract the normal loss, and you will get the total material cost. Similarly, labor cost plus the labor cost in opening WIP. Overheads cost plus the overheads cost in the opening WIP. This becomes your total cost from which, so this will be 52 plus 14 plus 28, which is 94 plus 15 of the opening WIP minus 4,000. So 94 plus 11, that is how you're getting a total cost of 1,05,000. When you will divide it by the equivalent units, which we have just calculated, you will get the cost per unit for each element, which you will apply to abnormal gain, which is 100% complete. So you can show these figures, or because this is 100% complete, 2000 is common. You can do a final calculation of 2000 into 6.75793. Then you have the closing WIP, material 90%, labor 30%, overheads 30%. So 4,500 will be multiplied by material cost per unit of 3.20. 1,500 multiplied by 1.1724, the labor cost, and 1,500 into 2.2069. I did not round, I have written a tentative figure here, and I've got the total of closing WIP. So in rounding off, I have been just a little tentative. I have kept in my mind in the background that I might have to adjust this. So I might adjust a figure here and there. Similarly, 15,000 into 6.5793 was giving me 689.5. So when I took all these figures and compared it with the uh, total cost of 105, I found there was a difference of 1.5. So this was definitely rounded off to next higher number, zero point 0.5 here. And this was also 1758.6. So this also rounded off to 1759. So this fits the entire equation. Remember, if there is no abnormal gain, then there would be abnormal loss. So all the three figures should total to 105. But if there is abnormal gain, in this figure, add the value you have calculated of abnormal gain, and then that two figures, 113 and 5, 118, 159, should be the total of these two, right? Then you can easily prepare your process account once you have adjusted the rounding off in this statement itself. And you have also verified your answer twice, that the totals of the figure should be, they're coming out to be this much also, and they should match in the total figures also. Normal loss account, no, not even a single unit of scrap, so nothing could be sold. Entire will be charged from the abnormal gain. So what is the abnormal gain? You could produce 2000 extra unit, and as the cost per unit is coming out to be 6 point something, so your total profit is 13,159. But if this would not have been there, we would have still had a 2000 units of scrap, which could have easily fetched us 4000 rupees. So truly speaking, the abnormal gain is 9159, which will move to costing P&L account. Right? Any questions? Any questions? No. Okay. We are starting with the next topic, which is inter-process profits. Ready? All of you, I hope you're ready for the next topic, and there is absolute clarity in how we calculate the equivalent units and equivalent production. Now we're talking about inter-process profits. Right. Thank you, Gayatri. So what happens in inter-process profits is, so far you have seen that process one manufactures something, let's say, and this moves, this finished goods of process two becomes input for process one, or the raw material. Then whatever it converts into finished goods for the process one, finished output of process two, moves to process three. It becomes input for process three. And let's say process three is the lastest process. From there, it moves to finished goods stock account. So the output of finished goods goes to finished goods account. This is the complete unit. This is sold in the market. So let's say process one incurs the material, labor, and overheads, and the cost per unit comes out to be 10 rupee per unit here. So the 10 rupee cost per unit of raw material finished becomes raw material for process 2, plus it incurs another 20 rupees from its own side, value addition. So the total cost becomes 30, right? Now this 30 goes to process 3, and then process 3 also incurs another 20 from its own pocket. So the total cost of finished goods comes out to be 50 rupees. And let's say this is sold in the market for 150. So we say that the profit is 100 rupees. So far clear? Process 1 took something, made some raw material, labor, overheads, and the cost per unit for process 1 output is 10 rupee per unit. This 10 rupee moves as raw material to process 2, which incurs from its own pocket 20 rupees further. So the cost comes out to be 30 rupee per unit. Like we have just seen, the cost comes out to be 6.5793 for process 1. So similarly, it will move to process 2. There again, some expenditures will be incurred and the cost will increase. So we have seen here in the account, what is the entry? By transfer to next process, 15,000 units at 6 point something, which comes out to be 98,690, right? So similarly, the 30 rupee input goes to process 3. Process 3 incurs own material labor overheads on this 30 rupee input. Another 20 rupee is added from process 3. So the total cost of the goods becomes 50. And this 50 rupee finished goods cost is then sold for 150. So your costing P&L account will show you a profit of 100 rupee per unit. Now, in this whole process, we are not able to understand what is the profit of process 1. How is the profit process 1 performing? We don't know. How is the process 2 performing? We don't know. How is the process 3 performing? We don't know. Why? Because all these became a cost center. They were not profit centers. So whatever the cost was incurred, the goods were transferred to the next process at cost only. Process 1 department or account did not think of its own profit. It is possible that maybe process 1 is very profitable. Process 2 is not profitable. Process 3 is profitable. So if we are able to find out which process is not profitable, we have this option. We can outsource this part of the job, and then maybe we can increase our overall profits. So we have to evaluate or check the performance of each process also, whether the process accounts or the departments where these processes are carried on, are they profitable or not? So we give them the freedom that process 1 can charge some profit and then transfer the units to process 2. So supposing process 1 instead of 10 rupees charge another 100% profit on this. So it will not give the goods for 10 rupee, it will give it to him for 20 rupees. So 20 plus 20, then that becomes 40. Let's say process 2 charge 60 rupees of profit. So it will not give it to the process 3 at 30, it will give it at 100. And then it will incur another 20. So 120 is the cost till process 3. And then it adds another 20 rupees of profit for itself. So the total cost becomes 140 to finish goods. And then this 140 is sold for 150. So finished goods department get a profit of 10. So this 100 rupee profit is allocated amongst 10 for process 1, 60 for process 2, 20 for process 3, and 10 for finished goods account. So we know that process 2 is very profitable. Okay. So this is the entire concept of transferring the output of first process to the subsequent process, not at cost, but at some profit, which is called inter-process profits. So 10 rupee becomes the inter-process profit in process 1. 60 rupee becomes the inter-process profit for process 2. 20 rupees becomes the inter-process profit for process 3. And 10 rupee becomes the inter-process profit for finished goods account. This is the concept. But one very important aspect here is that what if there is closing stock? So we have seen that process 1 had 10 rupees, process 2 had 60 rupees, process 3 had 20 rupees, and finished goods units have 10 rupees. So the total profit comes out to be 100, which was the total profit here also. But this happened when the entire output is transferred to the next process and there is absolutely no closing stock. But what if some part of the units transferred from process 1 to process 2, let's say 20 rupees. So out of this 20, it could process only 18 units 18 rupees of goods, and there was a closing stock of 2 rupees here. So what will happen is the profit of process 1, 10 on 10. So in this 2 rupees, there would be 1 rupee profit, which will be blocked here itself, okay, which will not be realized. Similarly, process 2 will then process 18 plus 20, that will become 38. Add another 50 to this, 88. And then in process 3, this 88 rupees goods move, but 44 rupees is closing stock. Half could only be processed and half moved to the next process. So what will happen in this 44 rupees? There will be some part of profit of process 2, which is not moved to the finished units. And in that also some part of profit of process 1. So there will be a chain, right? So if there is some closing stocks in process 1, the process 1 closing stocks comes from the market. So there is no inter-process profit. Therefore, there is no unrealized profit, which is blocked in the closing stock. But if there is a closing stock of process 2, then if there is a closing stock of process 2, what will happen? The process 1's closing profit will be blocked. Similarly, if there is a closing stock in process 3, it will have profits from process 1 as well as profits of process 2. If finished goods account also is not able to sell everything, then the closing stock which is lying in the finished goods will have an inter-process profit of process 1, process 2, process 3, all the three. So this becomes unrealized profits. It gets blocked. So if that is the scenario, even if you look at the total profits, this total profits will not be 100, it will be something less. Maybe out of this 10, 2 rupees gets blocked here. Out of this 60, 15 rupees gets blocked for process 2, and another 3 rupees gets blocked for process 1. In this 20, let's say another 3 rupees of profit gets blocked for process 3, 2, and plus another 2 rupees blocked for process 1, so on. And in the finished goods, 1 rupee blocked from process 3, 2 rupees blocked from process 2, 1 rupee blocked from process 1. So all this will become unrealized profit. So what I'm saying is, whatever is the closing stocks in each process, apart from process 1, process 2 onwards, will have some element of inter-process profits which are unrealized. So if I say 100 rupee profit, from this 100, I'll have to subtract 2, 15, 2, 3, 2, 1, 2, 1. That will be the true profit for the entity as a whole. So we have to calculate what is the unrealized profit in the closing stock. And then in the next period, this closing stocks will become opening stocks. And if we follow FIFO, they will be sold. So when they will be sold, this unrealized profit will then get realized. So in the next period, unrealized profits in the opening stock will get realized, but the closing stocks will have again unrealized profits. So to calculate the true profit, the profit in which we had in this period plus the unrealized profit from the opening stocks minus the unrealized profit in the closing stocks. That will give you the true profit for the entire entity as a whole. Now this looks maybe looking a little complicated. There is a cycle, how we will calculate if there is closing stocks with finished goods. We have to calculate the profits of the interprocess profits of process 3, which are blocked in this. Therefore, the interprocess profits of process 2, which is blocked with finished goods. Therefore, the interprocess profits of process 1. So overall, if you calculate it, it will become a little, yeah, it is tough to examine individual process profits. It is completely depending upon previous profits, what margin does it add, and how much is coming from process one and how much you are doing your addition. So for example, process two has 20 rupees coming from process one and another 20 it has done on its own. So the closing stock is of finished goods, 40. So out of this 40, uh, we have to see how much is the content of process 2 in is 20. So in this 20 in which the process 2 has incurred expenses, there is absolutely no inter-process profit. But the part which has come from process 1, in this 20 there is inter-process profits. Similarly in process 3, it is incurring some expenditure from its own pocket. So in this part, there will be no inter-process profit, but only the inter-process profit will be on that part which is coming from process 2 and is contained in the closing WIP. And then in that, not just the inter-process profit of process 2, but also the inter-process profit of process 1 will be blocked. So looking at this, trying to solve it in this fashion may become a little difficult, or you are prone to make errors if this thing happens. Okay. So, but there is a very simple technique which will automatically give you the complete calculations of these inter-process profits without any error. And the process also becomes very simple. Process in the sense, not the process we will doing, the process of solving the question. Two things you have to remember here. One, you have to be very, very careful about two things. Number one, these questions can also be solved using FIFO or weighted average. These questions can also be solved either using FIFO or using weighted average. Calculations are very easy when you use weighted average. In equivalent production, both were easy, FIFO or weighted average, hardly much difference. Rather, FIFO intuitively was more appealing to the uh, senses, or it made sense. But both were equally okay. But if you look at the inter-process costing, weighted average is easier, much easier in calculations. And if nothing is said, and 99% nothing will be said, you will follow this method only, and you will mention a note in the examination answer that we have followed the weighted average method in calculating the inter-process profits. Okay. I will not solve any question using FIFO. I will just tell you, had it been FIFO, what calculations would you have been required to do? Okay. So first thing you have to be very careful while taking up these type of questions is that they can be done either FIFO or weighted average. 99% you will not be asked any specific method. So we are using weighted average, and we'll solve it using weighted average, and we'll write a note in the answer sheet that we have followed weighted average method. First thing is clear. Second and very important thing is your closing stocks can be valued at prime cost or at works cost. These two things that I'm writing are very, very important. You can take a note of it. That either, right, we will focus on that. So there are two ways in which these questions can also be done, FIFO or weighted average, but we will follow weighted average, and we'll put a note in the final answer that we have used weighted average method. Secondly, The closing stocks can be valued either at prime cost or at works cost or factory cost. This may specifically be given. And if this is specifically given, it is generally given as the last part of the question. This is generally given as the last statement in the question. So don't start doing the question before reading this. So please ensure before you start doing the question, otherwise you would have done it and everything will get uh, wrong. So before you take up and start doing the question by looking at the figures, "Ki this is easy, I can manage it," ensure that you look whether the closing stocks have been specifically mentioned to be given at prime cost or at works cost. If yes, then follow that method. It will create a difference. And if not, I suggest follow works cost and mention in the answer that you have followed the works cost. Okay. And another caution I'm telling you here is that this particular line, that the stocks are valued at prime cost or at works cost, is generally the last line of the question. So it can be in the beginning if it is okay, but it can be the last line of the question. So please don't start the question until and unless you figure out whether anything pertaining to closing stocks valuation is mentioned in the question or not. What difference will it create? I'm sure you by now you know what is prime cost and works cost. So you've done the cost sheet, I hope, which means prime cost is material, labor, and direct expenses, whereas valuing at works cost means material, labor, direct expenses plus factory overheads or manufacturing overheads, and then you subtract the closing stock. That means you are valuing your closing stocks at works cost. Okay. So this will create a huge difference whether the stocks are to be valued at works cost or at prime cost. So firstly, I'm sure you've understood the concept that what do we mean by inter-process profits? It is implying that the output of the first process is moving to the next process, not at cost, but at some profit. So this is called the transfer price profit. Yeah, so let me just complete this question and you will have your answers. What is the difference if the closing stock is valued at prime cost? If it is valued at prime cost, your order would be opening WIP, opening stock, sorry, not WIP, plus material, plus labor, plus direct expenses if there are. Then you will take the total here. Then you subtract the closing stock because closing stock is valued at prime cost. So this is your prime cost. Then you will have another total after subtracting the prime cost, closing stock. Then you will add overheads. So overheads comes here. This becomes your total cost or total work cost. Then you will add the profit element of transfer price, and this will become your total again transferred to next process. So on the credit side, you will write by transfer to process 2. Okay. This will be the order if closing stocks are to be valued at prime cost. Opening stock, material, labor, direct expenses, total prime cost minus less closing stock, total prime cost of goods transferred to next process plus overheads, total cost of goods moving to the next process, add element of profit. So this is the total price at which the goods will move to next process. Had this been valued at works cost. So if closing stock is valued at works cost, then you will have opening stock plus material plus labor plus direct expenses plus overheads. This would give you the total. Then you will subtract closing stocks, total cost transfer to next process, add profit, total value of goods transferred to next process, including profit. So the most important difference will be if it is valued at prime cost, you have to first subtract the closing stock and then comes overheads. So the order is closing minus closing stock plus overheads. However, if it is valued at works cost, the order is plus overheads, then minus closing stock. That's the main difference, and that you have to remember. Okay, so it's closing stock subtracted first, then overheads are added, or overheads are added first and then closing stock is subtracted. That's the main difference if it is the stocks are valued at prime cost or at works cost. And like I said, why weighted average would be easy? Weighted average is easy because you will just take the total here and subtract the closing stocks, right? If you were supposed to follow FIFO, you will require to prepare a working note where you will not take the total, you will take the current expenses, and from this you will subtract the closing stock. But then then opening stock will be added and you'll get the total figure. So you will have to keep the segregated figures of material, labor, and expenses incurred in this period. This total will not help you to calculate the closing stock because this total will have an element of opening stock. So you cannot add opening stock in this because closing stocks are to be valued at FIFO. So that means opening stock is no longer in the closing stock. It has passed completely. Whatever closing stock you have is from the current expenses only, right? So it will become difficult if you keep the opening stocks, the stocks on FIFO basis. So it's better that we take the stocks on weighted average method, and prime cost and works cost do not pose much problem. The only order is in prime cost, first subtract closing stock, then add overheads. In works cost, first add overheads, then subtract closing stock. So this is the only difference. In prime cost, it is minus closing stock plus overheads. And in works cost, it is plus overheads minus closing stock. So what happens generally is if you follow the prime cost, the only caution I'll throw here is that generally when you subtract the closing stock, sometimes you might forget to add the overheads. You simply add the profit. Profit will come in the last. You remember if you've been keeping your stocks at prime cost, first closing stock, then overheads. So don't forget to add the overheads, right? So this was the fundamentals of inter-process profit. I'm sure concept is clear. Concept is that the units will not move from process one. The output of process one will not move to the output of process, will not become the input for process two at cost. The process one is going to charge some part of profit here. So similarly, process two will pass on the output, which will become the input of process one. Process three at some profit. Process three will add some profit to its own department first, and then transfer the goods to the finished goods department. So this is inter-process profits, first thing. Second thing is, in doing so, if the process keeps some closing stocks with them, the profits of inter-process becomes unrealized or blocked in the closing stocks. So in order to arrive at the statement of profit, or when we calculate the final profit, this amount of unrealized profits, which are present in the closing stocks of process 2, process 3, process 4, and finished goods account, they have to be reduced. But since they will become the opening stock for the next period, so the unrealized profits in opening stocks are realized, the current period profits are there, less the profits unrealized in closing stocks. Third important aspect is that these questions can be done either using FIFO or weighted average. 99% question will not say this, so you have to follow weighted average and you have to take a note in the exam that we are following weighted average. Very rarely will you get a question where you are specifically asked to do a FIFO method. But if that is done, it will become a little more, calculations will become a little cumbersome. Otherwise, concept is simple. Weighted average we will follow, not FIFO. Aradhana has a question. Can you please type it in the chat window, your query? If you have permission to speak, you may ask. Otherwise, please type your answer in the chat window. Type your question, sorry. I'll just take up that. In the meantime, let's coming to the main points that we have covered up here. So inter-process profit means the output of one process is transferred to the next process at some profit. Secondly, the closing stocks will have unrealized profits from the previous processes, so they should be subtracted while calculating the true profit. Thirdly, questions can be done weighted average or FIFO. We will follow weighted average only. And if you follow FIFO or if you follow weighted average, your closing stocks can be valued at prime cost or at works cost. So 90% you will be having a question on weighted average, which can be further with prime cost, closing stocks valued at prime cost, or closing stocks valued at works cost. The difference is, if it is valued at prime cost, first closing stocks are subtracted, then overheads are added. But if it is valued at works cost, first overheads are added, then closing stock is subtracted. Right? And most important thing is, the profits will be generally given as a percentage on transfer price. So we will apply the same rule, like 25% on sale means 1/4 on sale is equivalent to 1/3 on cost. So here it is not considered sale, it is called the transfer price. Why? Because process 1 is not selling something, it is only transferring to the next process. So a profit of 25% on transfer price means 1/4 on sale is equivalent to 1/3 on cost. So from cost to sales, when you move, you have to add the numerator and denominator to find out the denominator. But from sales to cost, you will subtract. Okay, so this will really come handy. Why? Because in the process accounts, you will be having information about cost. You will not have information about the transfer price. Transfer price is something you have to calculate. So profit will generally be always given as a percentage of transfer price, but what we will have in our hand is cost. So reduce the percentage of transfer price into a fraction, and 1/4 on transfer price is 1/3 on cost. 1/5 on transfer price is 1/4 on cost. 1/3 on transfer price is 1/2 on cost. 40% on transfer price is 2/5 on transfer price is 2/3 on cost. All right. So I think we are ready to take up this question. And before that, let me show you the performer. So it's very simple. We will have particulars and three columns: total, cost, profit. In some books or at some places, you may have cost, profit, and total. But somehow, my personal liking is for total, cost, and profit, because the way I say it, this is the total, in this much is the cost, and this much is the profit. So I bifurcate the total into cost and profit. You can also take cost plus profit is equal to total. This is not only on the debit side, the account will also be on the credit side. On the credit side also, you will have particulars, total cost and profit. However, the substantial work is done on the debit side itself, not on the credit side. On credit side, you just have one entry by transfer to next process. Only one single entry. All workings will be done here. So like I said, if you have closing stocks valued at prime cost, how will you calculate? You will have opening stock, which will have, let's say, total something, and this will have some part of cost as well as some part of profit, which was unrealized last period, because this is what is the unrealized profits of the closing stock for the last period, which have now become opening. Then you will have material cost incurred. Okay, there will be no profit in this because it is coming from outside. You will have labor expenses. Again, this will have no profit. You will have direct expenses, maybe or may not be. This will again have no profit. Everything will be cost. Right? And then you will take the total of the prime cost for the period minus closing stock. So what will happen is a figure will come up here. Let's say 10,000, cost 8,000, and profit 2,000. So if you had said that the closing stock is 1,000, right? You will automatically establish your relation. If the total is 10, which is 8,000 cost and 2,000 profit, that is 8 is to 2. So 1,000 will have proportionately 800 as cost and 200 as profit. You will be able to calculate quickly using these figures. And because you are using these figures, which has a total of opening stock also, implies you are following weighted average method. Otherwise, what you would have to do is you would have to take the total of these three and then calculate the cost of closing stock. But here we have opening stock also weighted average. Okay. Then you might take another total here at this point. Total of prime cost of goods transferred. Then you add overheads and you have total cost of goods transferred, right? So let's say this figure comes out to be, here you have 9,000. You had incurred another overheads of 6,000. So the total comes out to be 15,000. Now you will add profit. So profit was what? Let's say 25% on transfer price. So 1 by 4 on cost is 1 by 3 on 1 by 3, 4 on transfer price is equivalent to 1 by 3 on cost. So profit will be 1/3 of this. So profit will be 5,000, which will have no cost, only profit. So let's say 7 plus 6, 13,200, which has a profit of 1,800. And now you are adding another profit of 5,000. So by transfer to next process, 15 and 5, 20,000 costing goods, costing 13,200, and which has a profit of 6,800. Okay. So things will become very easy if you are doing your calculations properly mathematically. All that is required is proportionate method. So if out of 10,000, which has a cost of 8,000 and profit in which there was an inter-process profit of 2,000, 1,000 of closing stock remains. That means the cost of that would have been proportionately 800, and there would have been an inter-process profit of 200. So just calculate what is this percentage over this, 80%. So out of 1,000, 80% is closing stock cost, and the remaining is profit. And the best part is that these totals will always get tallied. So if you have done any error, it will come to you will be able to take a note of it immediately, right? Like in the equivalent production also, if your totals will not match, that means something has gone wrong. Okay. So this is very simple. This is how you will calculate if things are to be calculated and prime cost. If it had been not been prime cost, closing stocks would not have been subtracted here. After direct expenses, you would have written overheads, 6,000, 6,000, and then 16,000 would have been the total. From there, you will subtract proportionately the closing stocks. So this was just an example. Okay. I can give you your 10 minutes break and then we can start with the question. Now, after that, you can absorb this all information. And if you have any question from the concepts we have covered so far, you can please ask. Those who do not have any queries or questions, they can take a break for 10 minutes. Right, it is a break. Break. Thank you. So let's look at this question. A Limited produces product AXE X and it passes through two processes before it is completed and transferred to the finished stock. So we have process one, from where the goods will move to process two, from where the goods will move to finished stock account, from where they will be sold. The following data relates to the October 1981. Particulars: opening stock 7,500 rupees, in process two 9,000, and in finished stock account 22,500. Then you have direct material, wages, factory overheads, and closing stocks for process one, process two, and finished stock account. Remember, in finished stock account, there is no activity, so no material, no wages, no overheads. It's just storing the finished units. Inter-process profits included in the opening stock. That means in the last period, there must have been a closing stock of 7,500, which has passed as opening stock to process one in the next period, in this period. But because process one procures every material, wages, factory overheads, everything is from outside, there is no question of inter-process profit on expenses incurred in process one, and therefore no question of inter-process profits in opening stocks and closing stocks. However, process two, there is a closing stock of 9,000 in the previous period, which has now become the opening stock of current period, in which there was an inter-process profit of 1,500. And similarly, the 22,500 finished stock opening stock already has inter-process profits of 8,250, which was blocked last year on the last period, which will now be released. The output of process one moves to process two at 25% on transfer price. So this moves here, and here it is 25% on transfer price, which means process one charge 1/4 on transfer price, 1/3 on cost. So process will charge 1/3 of the profit on cost. Output of process two is transferred to finished stock at 20% profit on transfer price. Once again, 1/5 on transfer price will become 1/4 on cost. So process two will move the goods to finished stock account at 1/4 on cost. So whatever the cost is there for process two, 1/4 profit it will add, and then it will move the goods to the finished stock account. Important line, stocks in processes are valued at prime cost. Like I said, this will generally be the last line in your question, or it will be towards the end. So you have to be very careful. So stocks are to be valued at prime cost. So our order would be opening stock, material, labor, total, minus closing stock. Again, a column of total, plus overheads, again a column of total, and then plus profit, and again a column of total. And this total will match by transfer to next process or finished goods account. Right? Opening stocks, material, labor, calculate the total. Why total is necessary? Because on this you will apply the proportionate method. Therefore, it is important to have the totals here. That's why you are following the weighted average. Then after deducting the closing stock, you have the total prime cost of goods transferred plus overheads, total cost of factory cost of goods transferred, add your profit, and then total value of goods transferred. So this is output of process 2 is transferred at 20% on transfer price, and stock in process are valued at prime cost. Finished goods is valued at a price which it is to be received from the process 2, and indirectly here it is saying that finished stock does not employ any material labor or overhead. And the sales for the period is also given as 1,40,000. Process, cost accounts and finished goods account showing the profit element of each stage. Okay, so let's start with process 1 account. What I'll do is I'll put up the values here first so that you don't miss on anything. You will have opening stock, you will have material, wages, total prime cost, less closing stock, total prime cost of goods transferred to next process, add overheads cost, total factory cost or works cost, add profit because it is process 1 at the rate of 33.33% or 1 by 3 on cost by transfer to next process. Instead of next process, by transfer to process 2. Right? I hope there is no doubt here. Process 2 account also, how it will proceed. To opening stock, one additional line that will come in process 2 is to process 1 account. So whatever is coming from process 1. Then you incur material, labor, then you have a total prime cost again. Then you subtract closing stock. Then you have total of prime cost transferred to finished stock. Finished goods account. Then you add overheads, which you generally forget if you will not write it beforehand. You may forget this part, so remember to do this. Then total works cost, add profit at the rate of, it was 1 by 5 on transfer price, right? Process 2 is transfer to finished stock at 20% on transfer price, 1 by 5 on transfer price, 25% on cost, 1 by 4 or 25% on cost. By finished goods account. Then you will have finished goods account. Or finished stock account. It also has opening stock. Then something is coming from process 2. No material load, no labor, no overheads, nothing. total less closing stocks, total cost of goods sold, sales, and profit here will be the balancing figure because it is not said what profit you are charging on cost. Sales figure is given, so sales will be mentioned here. You can also write by sales here. Okay. So once you have filled in all the performer, screen not visible, uh, Prajyot Gaikwad, others, can you see the screen? If yes, please, Prabjot, you have to join again, I guess. Drop from the call and join again. This will help you to be able to see the screen. Just confirm if some others are able to see the screen. Yes, ma'am. Okay. Right. So once you have the performer ready, things become very easy for you to fill whatever the question may be. So let's start with process one account. What do we have? Opening stock. How much is the profit included in the opening stock? Nil. Then you have material, wages, overheads, and closing stock of 3,700. Material is 15, wages is 11,200, and factory overheads is 10,500. So the first thing was 7,500 of opening stock. So how much is the opening stock? 7,500. What is the cost of opening stock? 7,500. What is the inter-process profit in this? Unrealized inter-process profit? Nil. How much is the cost of material? 15,000. How much is the cost in this? 15,000. Profit? Nil. What is the value of wages in process 1? 11,200. Cost of wages, 11,200. Is there any profit in this in the process 1? No. So how much is the total prime cost? It comes out to be 15 and 11, 27,200, 27,200, 27,700 plus 7,500. So 7,500 plus 15,000 plus 11,200. So 33,700 is the total prime cost in process 1, which comprises of only cost. There is no inter-process profit so far. So out of this, if we subtract 3,700 as closing stock, 100% is cost. So 3,700 would be the value of cost. No inter-process profits. So total of prime cost, which is moving to the next process, is 33,700 minus 37,100. 30,000 goods worth of prime cost will move to the next process, whose cost is also 30,000 with zero profit. On this, we incur additional overheads cost of 10,500, which is again 100% cost, no profit. So the total works cost in process 1 of goods which are moving to the process 2 is 40,500, which is costing 40,500, on which the profit is zero. Now we will add 1/3 profit. So 4,500 into 1 by 3 or 33.33% of 40,500. So it becomes 13,500. Right? Which is absolutely no cost, which is pure profit. right? So what is the value of goods which is moving to the next process? 54,000 worth of goods will move to the next process, whose cost is 40,500, in which the profit is 13,500. By transfer to process 2, 54,000, which has a cost of 40,500, which has an inter-process profit of 13,500. This will tally your process 1 account. 54,000 worth of goods will move to process 2, which has a cost of 40,500 and which has an inter-process profit of 13,500. Right? Or any questions so far? Okay. Let's start with process 2. Opening stock 9,000, which has an inter-process profit of 1,500. So first let me write this statement only. The total in process 2, opening stock is 9,000, which has an inter-process profit of 1,500, implies the cost of opening stock from process 1 was 7,500. Then from process 1, in this period, 54,000 worth of goods have come, which is costing 40,400, 500, sorry, which has a profit of 13,500. This will move to next process. 54,000 worth of goods costing 4,500 with inter-process profit 13,500. Now in process 2, what is the cost of material incurred and wages? Don't look at the factory overheads, just look at material and wages. 15,750, 11,250. So 15,750 of material and 11,250 of labor, which is pure cost, no inter-process profit. So the total of prime cost in process 2 becomes this. Add all 4, and because you are also opening the opening stock within this, implies you are following weighted average method. So the total cost is 90,000, which has 15,000 of profit, 1,500 plus 13,500. Therefore, the cost of this 90,000 would be 75,000. We will add up this also to verify our calculations. 7,500 plus 40,500 plus 15,750 plus 11,250. So they should come out to be 75,000. Yes. Now, before you look at the closing overhead, which is 4,500, you have to look at the closing stocks. So overheads and closing stocks both are basically 4,500 each. So first subtract the closing stock, 4,500. What is the relation of 90,000 and 4,500? Just by eyeballing this, I can see it is 5%. Or a quick calculation, I can see that this figure is 5%. So what will be 5% of 75,000? 3,750, and 5% of 1,500 would be 750. So we have a closing stock worth 4,500. Or I can establish what is the relation between 75 divided by 90. I'll calculate that. It's 0.833 when I multiply it by 4,500. I get out the value of cost. Okay. So this is purely proportionate or unitary method. If 90,000 is costing me 75,000, what will be a 1 rupee cost? Will total of 1 will cost 75,000 divided by 90,000. Therefore, what will be the cost in closing stock of 4,500? 75 by 90,000 into 4,500. So establish the relation 75 divided by 90, proportion is 0.8333 into 4,500 will give you the cost included in the closing stock 3750. So this should be subtracted. When this is subtracted, the cost of prime cost, which will move to finished stock account, is 85,500, which has a cost of 71,250, in which the profit is 14,250. Constantly in between, keep checking your figures. 85,500, does it total to 71,250 plus 14,250? Yes. Now you will add the overheads of 4,500, which is pure cost, which is no profit. So the total value of goods which will move to the next process is, or finished stock account, is 90,000, which has a cost of 75,750, in which the inter-process profits were 14,250. So basically what is happening is, remember we have earned a profit of how much in process one? 13,500. Okay. So out of this 13,500, 750 is blocked. So 13,500 minus 750 is blocked in the closing stock. So our profit in second process should be 12,750, but the opening stock unrealized profit will be released. So plus 1,500, you should get 14,250. You can check your calculations here. Once again, 13,500 was the profit of the first process. So what will happen? Before adding the process of profit and process to 13,500 minus 750 blocked in the closing stock plus 1,500 released in the opening stock. This is released, this is blocked. So 13,500 plus 750, 14,250. Now you add 25% profit of process 2. 25% of 90,000 will total to 22,500. Right? Which is no cost, pure profit. So by transfer to finished stock account will be 1,12,500, which has a cost of 75,750, and the profit included in this is 14 plus 22, 36,750. Once again, do the total of the three. Do they match? 75,750 plus 36,750. Yes, it is 1,12,500. So in the finished stock account, 1,12,500 worth of goods will move. Proportionate cost should be reduced. Proportionate cost should be reduced in closing stock. Proportionate value. So just like we have the total of prime cost, which is 90,000, the cost involved in this is 75,000, and the profit element in this is 15,000, out of which 4,500 proportionate is the closing stock. So out of 90, if 4,500 is the closing stock, and because 90,000 has a cost of 75 and 15 profit, so on that proportion basis, 4,500 should have a cost of 3,750 and 750 should be the profit in this. So we have bifurcated the closing stock into elements of cost and profit. But because closing stock is subtracted, so from 90,000, 85,500 worth of goods will only pass to the next process. And out of 75,000, 71,250 cost will pass to the next process, which already has a profit of process one, 14,250. That is what the calculation is. Proportionate cost is not reduced, it's the closing stock we are reducing. But we are trying to figure out that of the total value of 4,500 in the closing stock, how much is the cost and how much is the inter-process profit. So for that, we applied this proportionate method and we found that the cost was 3,750 and the inter-process profit was 750. So that will become blocked here. That will not be realized because process 2 was not able to move these goods to the finished stock. They were remaining with the process 2. So the profit of process 1 will also blocked here. So process 1 earned 13,500 and then passed on to process 2. If process 2 would have been able to sell it entirely, then 13,500 would have been released. But no, it blocked with itself 4,500 worth of goods. So the process 1 750 rupees profit also got blocked. So process 1 earned 13,500 out of which 750 blocked in or unrealized in closing stock. So process 1 could only realize 12,750 of the profit of the current period. However, the opening stock already had a 1,500 rupees profit, which now got realized. So 12,750 plus 1,500 is 14,250. How I have calculated 22,500. What is the cost to process to 90,000? Output of process 2 is transferred to finished stock at 20% profit on the transfer price. This line. 20% on the transfer price is like 1 by 5 on sale is equivalent to 1 by 4 on cost. And the cost to process 2 was 90,000. So having solved this, I got 22,500. Is the profit which process 2 will make, which is pure profit, no cost. So 90 plus 22,500, 1,12,500 worth of goods moved to finished stock account, which has a cost of 75,750 and which has a inter-process profits of process 1 and process 2 both, 14,250 and 22,500. Right? Let's move on to finished stock account. Finished stock account already has a opening stock of 22,500, which has an inter-process profit of 8,250 and closing stock 11,250. So finished stock account has opening stock of 22,500, which has inter-process profits of 8,250. And it has a closing stock of 11,250. So I don't have to go back. I have written these figures. So if the opening stock at finished stock account is 22,500, which has an inter-process profit of 8,250, it implies the cost of this would have been 14,250. This cost is the balancing figure. Okay, 22,500 and 8,250 is given. So the cost included in opening stock from process 1 and 2, which is lying with the finished stock, is 14,250. Now something is coming from process 2, 1,12,500. worth of goods, which has a cost of 75,750 and which has already the profits of process 1 and 2, 36,750. One lakh 12,500 plus 22,500 is 1,35,000, which has a cost of 75,750 plus 14,250. So, so the cost of these goods is 90,000, and therefore it has a profit of 45,000. Okay. Just quickly, I can see that the relation of this total in cost and profit is 2:1. So 1,35,000 into 2 by 3 is 90 and 135 into 1 by 3 is 45. Or you can see two parts, 66.67%. So when you will divide 90 by 135, you will get 66.66 or 0.6666, right? So 90 by 135 is 66.6667%. Or I can say two-third part is, if you divide by 45, two-third part is 45 into 2 and 45 into 3. Two-third part is cost and only one-third part is profit. So similarly, bifurcating proportionately, what will be the cost of 11,250? 2 by 3 of 11,250. The cost contained in this will be 7,500, and therefore the profit would be 3,750. Okay. So what is the total cost of goods sold? 1,35,000 minus 11,250 is the closing stock. So cost of goods sold is 1,23,750, and it is sold for 1,40,000 as mentioned in the question. Sales is 1,40,000. So 1,23,750 cost of goods is sold of total, in which the cost is 82,500 and the inter-process profit in that is 41,250. Just verify 82,500 plus 41,250. So it's 1,23,750. And because it is being sold for 140, your profits are 16,250, which has no cost, pure profit. Check the figures again. 140 minus 123.75. So 16,250. So what is your total profit? 41,250 plus 16,250. So 1,40,000 worth of goods are sold, the sales price, the true cost of which is 82,500 and which has a profit of 41,250 plus 16,250. So the total profit which the organization is having is 57,500. By sales, 1,40,000. The cost of those goods is 82,500 and therefore the profit is 57,500. Okay, clear? We will prepare a statement also. By process one, how much was the profit? By process two, what was the profit? By finished goods account or finished stock account, what was the profit? And what was the profit by unrealized profits in opening stock of process one, process two, and finished stock? Two, what profit is blocked? The profit in closing stocks. Process one, process two, and finished goods account. So if you write here, how much is the profit that we had? Let's first take the inter-process profit included in opening stock. So in the first process, obviously there is nothing. In the second and process and in the finished stock account, it is 1500 and 8250. 1500 and 8250. Then how much is the profit which process one charged this time? Indirectly, what we are going to do, we are going to subtract this, and plus would be 13,500 and this. But because it is the first process, there is no unrealized profits in opening and closing stock. So there is only 13,500. Process two, opening stock had a profit of 1,500, which is now realized. Closing stock had a profit of 750, which is now blocked. Okay, let's look at this. Process two. Look at the three figures in the opening stock, in the closing stock, and in the profit element, 22,500. So from process to 22,500 we have generated, plus 1,500 we have liberated in the opening stock, minus 750 we have blocked in this period. So 22,500 is what we have generated, and out of which 750 is blocked, but the previous period's 1,500 is released. Similarly, in the finished stock account, again, look at the figures of profits in the opening stock, profits in the closing stocks, and the profit of balancing figure after sales. So finished goods account in this period has earned 16,250, whereas it has blocked 3,750 but liberated 8,250. So 16,250 is generated. Opening stock realized 8,250, but finished goods account, stock account blocked 3,750. So this will be your net profit for the entity. Just see how much it is. 13,500 you generated from process one. plus 22,500 you generated from process 2 plus 16,250 you generated from process 3. A total of 52,250 was generated from all the three processes and finished stock account in this period. Unrealized profits on opening stocks realized 8,250 plus 1,500, that is 9,750. So 52,250 plus 9,750. So your total profits should have been 62,000 if nothing would have been blocked. But you have something blocked in closing stocks. So minus 750 and minus 3,750. So minus 4,500. Your net profits are 57,500. This figure is your final answer of the entity's profit, which can also be tallied from this figure. If this tallies, that means you've done everything correct. Okay. Yeah, 62,000, but we have some unrealized profits. In process 1, nothing. In process 2, 750. And in process 2's finished stock, closing stock, 3,750. So out of 62,000, subtract 3,750 and 750, 4,500. So your profits are 57,500. This is not just a statement of profit, it's also a way to verify your answer, even if it is not said. Please try to prepare this to verify your answers. Okay. Any questions in this, or is it clear? All right. So this is how you prepare the statement of profit and you can verify your answer. So this was about inter-process profits. So look at this. We have taken the closing stock at prime cost. If this would have been to be taken at works cost, only difference would have been that in all the processes, this would have come here and this would have gone down. So you will not require to take twice the totals: material, labor, overheads, total, then minus closing stock and add profit. Only these two will interchange, but we have to be careful. And remember, we are taking the proportionate method from the totals, and this total also contains opening stocks. So that means we have merged the opening stocks in the current year's cost, right? You have merged it. The 9,000 is merged into this. Therefore, the method you are following to calculate the stocks is weighted average method. Remember, in equivalent production also, we did the same thing. When we were following the weighted average, we merged the opening WIP 15,000 cost, material into material, labor into labor, overheads into overheads. So we have to merge when you are following the weighted average. We don't assume that it was done in the previous period. We add it here and we assume whatever it is from the current page. So we'll write two notes here that we are following the weighted average method. Second note is not required to be written. Why? Because question specifically mentioned use prime cost, and which we did. We did. Yes, if you are to value your closing stocks at works cost, overheads will come up, closing stocks will go down. Please explain unrealized profit, not able to understand. Okay, I'll explain here. What do you mean by unrealized profit? Let's say uh, you are you and your brother are there in the family. Okay. So your father gave you 1,000 rupees of goods. You moved it to your brother your brother asked that I want to sell these goods, give it to me. So you thought I will also earn my profit and you added 200 as profit. So you gave it to your brother at 1,200. Now, brother thought the goods are costing 1200, so he sold them for 1500. So the profit is 300 here. So what is the total profit of the entity? 200 plus 300. So the family earned 500. You earned 200 and your brother earned 300. The family earned 500. Okay. Repeating the same scenario, father gave 1000. You added 200 as profit on that and you handed over 1200 worth of goods to your brother. Now your brother wanted to sell them for 1500, but he could only sell 600, half for 750. So what is the profit? 150. And what is the remaining stock? 600 in the family. Okay. Now you look at the situation. How much is the profit of the entire family? The profit of the entire family is 200 by brother and 150 by you. So it should be 350, right? But is it really 350? No. Indirectly, what is happening is only 500, half has been sold by you. So only 500 worth of goods moved to your brother. You added 100 on this. I'm taking everything proportionately, half. So your father gave you goods worth 500. You added 100 rupee profit to this. So this became 600 for your brother. And he added 150 profit on that. So he sold it in on 750. So according to this, what is the profit of the family? 100 plus 150. So your profit is only 250, not 350. Then why am I getting this figure of 350 when I'm adding 200 and 150, 350? Okay. But the true profit is 250. So if I follow this concept, how will I get to know the exact profit? So what will you do? Your brother will prepare a statement of account. Let's say if this is brother's account, what will he say? I got 1200 worth of goods from my brother, which was costing 1000, which had a inter-process or brother's profit of 200. Out of this closing stock, 600, half. So the cost of that would be 500. And therefore the inter-process profit and this would be 100. So what I sold? 600 worth of goods, costing 500, in which there was an inter-process profit of 100. And this I sold for 750. So my profit is 150. So what is your profit? 200. Brother's profit? 150. Total profit? 350. Minus profit, which is unrealized in the closing stock? 100. So the true profit of the entity or family is 250, right? Is it clear now? Maithili, is it clear? Right. So when you are doing this question, you have to be careful that closing stocks are specifically mentioned to be given at prime cost or at works cost. So if nothing is mentioned, you can go by any method and you have to make a note in the final answer that we are following, valuing the closing stocks at prime cost or at works cost. The only difference is in prime cost, first subtract the closing stock, then add overheads. In works cost, first add the overheads, then subtract the closing stock. And secondly, question will not say FIFO, but technically, yes, weighted average is easy. So you have to follow the weighted average method. In the question, it is very clear, simple, Maithili. In the process one, what was the profit? 13,500. Okay. In the process two, out of all that thing that has come to process one, two from process one, total was 90,000 and 75,000 was the cost so far, which included 13,500, the inter-process profit of process one for this year, as well as 1,500 in the opening stocks. So out of that, if 4,500 closing stock remains, you calculate proportionately and it will automatically come out to be unrealized profit blocked in the closing stock. Here also in this example that I gave you, I didn't do anything. So how much is the goods coming to brother? 1200. What is the cost of it? 1000. How much was the profit of yours? 200. From this, if 600 remains, so you subtracted 600. Proportionately, you subtracted 500 and 100. So 100 becomes unrealized profit contained in the closing stock. Okay, example which I've taken of the brother, it says that if you had your father gave you 1000 rupees. I'll take a blank sheet somewhere. I'll get it. I think I'll take it here. Father gave goods worth rupees 1000 to brother one, who gave it to brother two, and who sold it in the market. So brother one added 200. This becomes 1200 to brother two. He sold it in the market for, let's say, 1500. So the profit of brother two becomes 300. So what is the profit of the entity? 200 plus 300, it becomes 500. Now, what happened is when 1000 rupees goods moved to brother one, he added 200 on that, 1200, and he passed the entire lot to brother two, no closing stocks. But at brother two, when 1200 worth of goods came, which was costing 1000, which had the brother one's profit 200, out of this, he kept a closing stock of 600 at this value. So if 1200 is costing 1000, 600 would be costing 500. So therefore the inter-process profit on this would be 100. This is blocked. So he could only sell 600 worth of goods for 750. So that means he earned 150. So the cost of 600 worth of goods was 500 and 100 was the profit of brother one. So 750 is sold for costing 500, which had a profit of 250. Is it clear now? So when you will subtract the closing stocks on proportionate method, you don't have to worry about anything. The answer will come automatically. Whatever the closing stocks are there, unrealized profit will automatically blocked on this, which will again so in the next period, it will become opening stock. So opening stock would be 600, costing 500 and 100. Now, if from brother to 3000 worth of goods come, costing 2200, where he made a profit of 800, and you add the two. So you are following weighted average. Now, in this, if he keeps again a closing stock of 900, that is one fourth. So again, 2700, one fourth would be 675. And similarly, the profit here would be 225. So this will get automatically blocked. All you have to do is take the total and subtract the closing stock. It will automatically give you all the solutions. You don't have to worry. Okay. Right, team? This was all about process costing. So three things important to understand: what is process cost, how we prepare the process cost accounts, how we take the output of process one to the subsequent process, how do we calculate normal loss, or abnormal gain, and how do we prepare the normal loss, or abnormal gain accounts. Then we talked about equivalent production. We are dealing with the closing stocks of work in progress. That means units which are semi-complete. So we convert them into equivalent units of 100% completed. And then we calculate the statement of equivalent units, statement of element of cost per unit, assigning these total cost to the closing stocks, finished goods, abnormal gain or abnormal loss, and then preparing the process account. Finally, we did today inter-process profits. So this is all about process costing as a chapter. I wanted to also discuss this case study. This is given in your books only, so please try to do it. It is a question based on equivalent production, and you will be having question, how many quantity of raw material was introduced during the month? How much was the normal loss and abnormal loss? What is the value of raw material added to the process during the month? What is the value of labor and overheads in closing WIP? So when you will calculate closing WIP, take the equivalent units of labor and overhead and multiply it by the per unit rate of labor and overheads. Okay. So some missing figures are there and some calculations can be there. If you are still here, I can take up this. Arnav Limited manufactures chemical solutions used in paint and adhesive products. These are produced in different processes. Some processes are hazardous in nature, which can result in fire accidents. At the end of last month, one fire accident occurred in the factory, and this fire destroyed some of the paper files containing records of the process operations for the month. You are the chief asset manager, finance, and you are assigned to prepare the process accounts for the month during which the fire occurred. From the documents and files of other sources, this information could be retrieved. So here you are. You have opening WIP at the beginning, 500 liters. So opening WIP is 500 liters, which was 80% complete for labor and 60% complete for overheads. And this was valued at 2,78,000. So we don't know the material part here, and material we can assume to be 100% complete. Then you had closing WIP also, which was 100 liters. This was 20% for labor and 10% for overheads. So again, material I'll take 100% most probably. Labor and overheads is 20% and 10%. Normal loss 10% of input, fresh input. So not the total, only whatever you have input fresh. And the total losses during the month were 800 liters, partly due to fire damage. Total loss 800 liters. Okay. So you had 500 opening plus introduced something minus closing 100, and there is a loss of 800. So input is 500 plus something, output is closing WIP 100 and loss 800. So we need to know how much is transferred to the next process. So output transfer to the next process was 3,400 liters. Now things become easy. 3,400 liters transferred to the next process. So now you have the details of the output, all three. 3,400 plus 900, 4,300. Out of 4,300, 500 was opening. So 3,800 must have been introduced. Right? This is your missing figure. Okay. And then now out of 800, when we are saying normal loss should be 10% of fresh input. So normal loss should be 380 liters. What remains? 420 becomes your abnormal loss so far. Okay, let's read it. Losses have a scrap value of 20 rupee per liter. So your normal loss can be sold. Okay, 380 into 20 will be the scrap realized from sale of normal loss. I'm giving you a hint only. You can complete it, and if you have any problem, we can take up in the next session. All raw materials are added at the commencement of the process. This was my assumption also, that material is 100%. Now I don't need it as assumption, as has been specifically provided in the question. The cost per equivalent unit is 660 rupee per month, which is made up of, okay. So the second statement is prepared here. Material cost it is coming out to be 300. So this will be total cost of material minus scrap realized from normal loss and divided by equivalent units of material. Use FIFO method to value the work in progress. Right. So I don't need to add the value of opening stock material here, which information I don't even have. So labor cost is coming out to be 300. Material is 300, labor is 200, and overheads is 160. Material, labor, overheads. From the following information, how many quantity of raw material was introduced in the month? So we have calculated 3,800, right? Because there was opening 500 plus something, and we had closing 100 of closing. Output was 100 of closing WIP. 800 was scrap. And there was, how much was transferred? 3,400 was transferred. So output details are given, which should total the input. So this missing figure is 3,800. Normal loss 380, abnormal loss 420. Value of raw material added to the process during the month. So, all right. Opening WIP was 100% complete as far as material is concerned. So in this process, I have put 0. We are following FIFO method. Units transferred in the next process is 3,400. So out of these 3,400, 500 were of opening stock and 2,900 would be from current production. Units introduced and completed. This would require 100% of raw material. I am preparing the statement of equivalent units. Material, opening stock will require 0%, so 0. Introduced and completed would require 100%, so 100%. Normal loss is taken as 0. Abnormal loss is taken as 100%, so 420. And closing WIP is also 100% as far as material is concerned, so another 100. So equivalent units of material would be 3,420. Okay. Now coming on to this. We don't know the total cost, but we know the scrap realized 380 into 20. And this when divided by equivalent units of material, 3,420. This gives us 300 rupee per unit. So when you will solve this 300 into 3,420, this comes out to be 10,26,000. But this is after deducting normal loss scrap 380 into 20, which is 7,600. So how much is the material added? 10 lakh 26,000 plus 7,600, it becomes 10 lakh 33,600. Similarly, you will calculate labor cost. Opening WIP was how much percent complete as far as labor? 80%. So you employed 20% on this. 500 units, 20% work done is 100. 2,900 is 2,900. Normal loss is 0. Abnormal loss is 420. And closing WIP is 100 liters, 20% complete as far as labor. So it's only 20. 100 into 20%, 20. 2,900 plus 420, 3,320, 3,340. And this statement says it is 200. So something divided by 3340 gives you 200. 200 into 3340. That would be the labor. Okay. Contained in closing WIP. So 20 into 200, 4,000. And similarly, you will calculate for 160 into closing WIP is 10% complete as far as overheads is concerned. So 100 into 20%, 20 units, equivalent units of labor at the rate of 200, and 100 into 10%, 10 multiplied by 160. So 4,000 and 1,600. Okay. So I hope this is clear. This is how you're going to complete the, similarly, you calculate the value of finished goods, right? So that is all. Try to complete the case study and all the questions from your study material thoroughly, all the MCQs also, so that you can be sure that you have understood the concepts well. Thank you all of you so much. Thank you, Manishi. That's it. Yes, yes, yes. Thank you. Good day, all of you. Thank you. Thank you, Manishi. Good day to you too. Thank you.